Hello and assalamu alaikum. Today we're gonna talk about the last topic of this first chapter, that is capital expenditure and revenue expenditure. When you are basically paying off your expenses can be classified into two main categories, that is your capital expenditure and your revenue expenditure. Okay, so there's capital expenditure and there's revenue expenditure. Now we want to discuss about both of these, the difference between both of these, why is one different from another, and the basic differences, and how the differences also mean that they are also financed. There are different sources of finance used for each expense, for paying off each expenditure. Now capital expenditure is basically infrequent in nature, do keep that in mind, while revenue expenditure is frequent in nature. When we say frequent and infrequent, that means that this is a rare or not that much, but revenue expenditure is frequent, so it's like a day-to-day thing, perhaps day-to-day or weekly, but this you can classify it as monthly or perhaps even once a year. So these are basically the expenditure on fixed or non-current assets such as buildings and machinery that are expected to last for more than 1 year. It depreciates over time. Okay, so these are basically for fixed or non-current assets, and the benefits of these particular, the expenditure, whatever this expenditure that you use on, the benefits of these particular non-current assets or fixed assets are expected to last for more than 1 year. This time period is the main difference. You can say that the benefits of expending on these particular assets, fixed or non-current assets, will last for more than 1 year, whereas in revenue expenditure refers to spending on costs other than fixed assets. That was for fixed assets or non-current assets. This is other than fixed assets. These are basically your regular expenditure. It is related to the cost of day-to-day running of a business, such as wages, raw materials, and the maintenance of fixed costs. Okay, so it's all about your maintenance of fixed costs. It's not just about your purchasing fixed costs or fixed assets or non-current assets. It's about your spending that you do to maintain these fixed assets, or purchasing your raw materials or wages, or just paying off your wages, day-to-day expenses basically. So that's why it is frequent in nature, whereas this is capital expenditure is infrequent in nature, because it's like just purchasing your buildings and machinery. And of course you don't do that every week or every month. You just do that once a year, or not once a year, at least once a month, once in 2 months, or once in 3 months. It varies business to business, but the basic idea is that it's infrequent in nature, and the benefits last for more than 1 year. Over here the benefits don't last for more than 1 year, because, well, whenever you purchase raw materials, the benefits is like the sales. The benefits of purchasing your raw materials is basically your production, the sales that you make. But the benefits of those sales don't last for a year. The sales, the whatever the profit that you make from these sales, it will last for some time, and then you will just continue production so that you can make more profit, and then it will run out eventually. And the maintenance of fixed costs as well, like the wages that you give, these are not, the benefits don't last for a year. It's just for 1 month perhaps, or weekly wages. Okay, and eventually you have to continue paying. It's frequent, so the benefits also don't last for more than a year. At most they last up to 1 year, but generally it's less. It's monthly or weekly, the benefits. So capital expenditure helps you generate profit in the future and brings long-term advantages to your business. Okay, it helps you generate profit in the future. So basically it's for generating your profit. As of course, if you buy machineries or buildings, like, it will add to you will use them in your production. It will enhance your production abilities, and it will just increase your scale of operations perhaps, so you can produce more, you can increase your productivity, etc. And it is recorded as a depreciation item on each year's balance sheet, whereas revenue expenditure is recorded on each year's income statement and will therefore reduce each year's profits. Those are basically, it helps to generate profit, and this eventually reduce your each year's profit, these expenses. But of course they do help in generating profit somewhat, by the benefits that you get from revenue expenditure last for short term, that is benefits last for less than a year. Now we're going to discuss more about the details in this particular para, what the benefits that you get from revenue expenditure. But hold on for that. Capital expenditure increases a business's asset position or value, which usually increases the income earning potential of the business. So as we said, that it increases your productivity or your production capacity by increasing your asset position or your values of your assets, since you are purchasing more assets. An appropriate example of capital expenditure will be purchasing new machines or updating them so that they can perform better than their usual performance. That is, you can say, enhancing their performance above normal. Okay, or you just buy you new machineries or just enhance you them so that they can perform better than usual, better than a normal machinery would. So both of these examples are counted as examples for capital expenditure. And of course, since it's infrequent in nature and the benefits last for long term, that's why the most appropriate sources of finance will be loan financing, such as long term loans, long term loans, medium term loans, basically that. And revenue expenditure, it merely maintains the assets earning capacity. It doesn't, you do not purchase more assets with this. Basically you are just maintaining your assets earning capacity. Over there the appropriate example was of, when we said that appropriate example was purchasing assets or enhancing those assets, but over here it's maintenance of assets. The difference between maintenance and assets is discussed over here. We were just coming to that in a moment. An appropriate example would include purchase of fuel for vehicles. So for this, a capital expenditure will be purchasing the vehicle itself, and revenue expenditure will be purchasing the fuel for the vehicle. Okay, so that's a big difference in terms of expenditure. Now finally, the last thing that we will discuss in today's lecture, that what is the basic difference when we say that it maintains assets rather than enhancing it. So I've written a whole ass paragraph about that, so let's read this. Maintenance generally brings assets back to its normal performance if it has deteriorated over time. If a business instead tries to update machines which will increase its potential above normal, then it will be classified as revenue expenditure. So basically it's all about maintenance, is about bringing the performance of that asset back to its normal position, but enhancing is about improving its potential, earning potential, the production potential above normal, above what it can, the maximum, which is increasing its maximum potential. Okay, for example, a machine produces 2000 units of cupcakes in one day. Okay, that's its normal potential, but over time its potential has decreased to 1500 units of cupcakes per day. So it has deteriorated over time, its performance. As such, maintenance of this machine will bring its performance back to 2000 units and hence classified as revenue expenditure. So if you're maintaining this particular asset, this machine, then its performance is coming back to its normal position, and that's why we classify it as a revenue expenditure, because you might have to do that frequently as well. And it's just merely maintaining the asset's earning capacity. It's not improving it more than its normal performance. We just brought it back to its normal position. On the other hand, if the machines was tuned and enhanced, due to which it's able to produce 2500 units per day, then this cost is classified as capital expenditure, since the performance has improved above normal. So since you were normally producing 2000 units, but now that you have tuned this machine and enhanced its performance, now it's able to produce 500 units more per day. That is, its performance has increased above normal. So I hope this paragraph helped you understand the basic difference between your maintaining your assets and enhancing those assets. So that can be very good example to understand the basic difference between your revenue expenditure and your capital expenditure. So once again, I will quick recap that capital expenditure is infrequent in nature, whereas revenue expenditure is frequent in nature. Revenue expenditure is all about your day-to-day expenses such as wages, raw materials, and maintenance of fixed assets, whereas capital expenditure is about purchasing on fixed or expenditure on fixed or non-current assets such as buildings and machinery, the benefits of which are expected to last for more than a year. So when you enhance your assets, their benefits are basically expected to last for more than a year, but when you maintain them, the benefits won't last that much. It might last for 3 months or 6 months, or up to a maximum more one year, most 1 year, not more than that. So it mainly maintains the asset earning capacity, whereas capital expenditure example will be enhancing the asset earning capacity, improving its earning capacity, or just purchasing the asset itself, purchasing new machineries. It is recorded on balance sheet. Capital expenditure is recorded on balance sheet as it is as a depreciation item, whereas revenue expenditure is recorded on income statement as it reduces each year's profit. Okay, it's basically a normal day-to-day expenses, so it's recorded on your income statement. And that's all for today. Thanks for watching, and we've covered up our basic 5.1 chapter. The working capital recording might not be a little too good, so I apologize for that. But if you need further help with that, to let me know. We're going to talk about working capital again, perhaps in sources of finance, so look forward to that. Thanks for watching, and Allah Hafiz.